Welcome to the Private Lenders Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the Private Lenders Podcast. We do appreciate it. Real quick before we get started, if you haven't done so already, join us and 2,600 other private lenders inside hardmoneymastermind.com. Go check it out. Okay, today we're talking about key metrics to track inside of a private lending business, because the reality is that there's a couple of mistakes you can make when it comes to this stuff. And we learned this years ago from our first business coach we hired right back in 2011 or 12 to track a few important things that really give you a good picture of what's going on in your company. Because on one end of things, you can't track everything under the sun. Like there could be 100 different metrics to track. It would take up way too much time and wouldn't really give you any more useful info. And on the other end of things, not tracking anything at all is also a mistake for a business owner. Like any company is a data company. Like what's going on with your marketing, with your finance, with your ops. And so we're going to break down the metrics that we focus on every month, every quarter, every year.
Exactly. And what we learned from this business coach back in the day was to use a trailing 12-month sheet, kind of an Excel spreadsheet. That was an easy way to kind of track some of these things. And in essence, like at the end of every month, when you put the data in, it's in essence the end of the last 12 months, right? So you're always kind of, if you can visualize what a chart or a graph would look like on this stuff, you can tell kind of in real time, which direction that you're going. And another thing to kind of not get too held up about is, this type of business has ebb and flows, and it goes up and down. And some months you might have this killer month, and other months you might, have an awful month and close 0 deals or 1 or 2 deals. And, to really analyze this on a quarterly basis or 3-month basis, all the way up to a 12-month basis. That's the best way to do it, just so you don't get discouraged. Because, even, a large portfolio that we have, there's months that we just have crappy months. And then next thing you know, like we do 27 loans the next month, right? And then you look at this over a few month time frame, you're like, okay, cool, everything equals out. And I'm sure, everyone listening, can relate to that. So, keep that in mind. Look back as a trailing 12 month. That's the easiest way to kind of identify some of these things. And also, typically, if you're early on in your hard money lending career or private lending career, you're gonna, for the most part, have pretty massive growth pretty quickly, right? Like the difference between year 1 and year 2 might be, double or triple. And then again, going in from year 2 to year 3, and then year 3 to year 4. But nevertheless, these 5 or 6 things that we're going to discuss are definitely good metrics to track. So number 1 is really keeping an eye on the contacts, and we just call it the email addresses that we're acquiring. So new contacts that you're acquiring every single month. The easiest way for us to do that internally is just look inside Infusionsoft and run a report of all new contacts. I shouldn't say new contacts. There's 2 different ways. You can do new contacts and you can do net contacts, because, every month, potentially, let's say you bring in 100 new contacts, 100 new inquiries. You also might have people that are unsubscribing from your email database. So it could be 100 people in, 10 people out, then you'll have a net 90. But nevertheless, the new contacts are obviously a very good metrics.
Yeah, one note on that, and I was talking to an Inner Circle member within the past month or so, Chris Davis. We don't look at unsubscribes. We don't want that in our brain. We don't want to worry about it. We just don't need it. People are going to unsubscribe. That's part of having a list of contacts that you market to, and it's totally fine. So we don't even you could worry about the net number if you wanted to, but we honestly just look at the top number. And like Jason said, we run that report. We see how people are coming into our system. Are we adding them ourselves? Because we have forms for that. Is it a loan application? Is it a free report? Is it a contact us? Whatever it may be. We look at that number and how that trends throughout the year, and optimize for that, right? Like optimize for getting more people in the front door. It's a huge metric. That's number 1, and something that we've been tracking for 15 years or so.
Yep. So the next thing we like to do is track the referral source for an actual closing. So we can identify, if our marketing dollars are being spent at the right place, where our leads are coming from. Now, naturally in this business, you should have at least a 50% repeat borrower closing base, at least 50%. A lot of companies that we know are higher. Ours is higher than 50%, but that's kind of the where you want to be. It's hard to grow a company when you're trying to have one-off deals, every deal over and over and over. But the nature of this business, if you're doing loans to real estate investors that are acquiring multiple properties throughout the year, you should be doing multiple loans for them throughout the year. Maybe not all of their loans, but multiple loans through them. Now, the loans that we do on commercial properties, a lot of times those are one-off, although there's some exceptions where borrowers have multiple commercial properties that we've done loans on. But definitely track your referral source for closing. The way that we do it is we typically have referral source 1 and referral source 2, because naturally some of these people might be coming from different places. And I can give you an example. So let's say somebody clicked on a Google AdWords campaign or Facebook AdWords campaign that we ran, several years ago, and it put them in our email database. And then, they reached out to us by filling out a loan application on our website because they clicked on an email, last week. So referral source 1 would be, the Google AdWords campaign. Referral source 2 would be, click, an email, through a loan application. So think about, I definitely recommend for anybody watching or listening to create someplace in your system, either through a Google's, through your pipeline spreadsheet that you're analyzing your data on, or, inside your loan servicing software, if there's a field for that, to put where these leads or where these closed loans are going, coming from. And if you look on our sheet, it's about 50 to 60% repeat borrower, typically maybe another 10% in broker business. And then the rest from, Google AdWords, Facebook AdWords, direct email campaigns, connected investor leads, whatever the case is, they're kind of spread out, but it definitely have 2 different tabs for 2 different types of referral sources.
It does take a bit of digging too. Like if you've been in business for a while, like you'll get inside your CRM and see when somebody came into your system, what else has happened since then. Like, for example, somebody could be in our email database for 5 years, and then they come to our meetup, and then at that meetup, we decide to do a deal. And so, like the referral source 1 and 2. So it takes a bit of digging, but it's worthwhile, to look back and see where your deals are actually coming from. Like, for example, maybe you're spending money on ads and you're not converting that much. Like maybe you haven't, closed a loan from an ad in 6 months, and that's something to take into account. Right.
Yep. So the next thing we track is our closed units and volume. Obviously, you might be like, duh, like, of course I should track that, but it's important to kind of to determine that. And, closed units and volume, again, if you look on a 12-month basis, they might be kind of all over the place in real time on a monthly basis. But then if you look back for 12 months, it's pretty stagnant, right? Like if you're newer in the business, it should be, going upwards. And if you've been in this business for a long period of time and you're trying to just kind of retain a similar, portfolio size, then it should be, pretty flat, which isn't a bad thing. In this particular case, that means you're still deploying a lot of good money responsibly, getting that money back and redeploying it. But definitely, closed units and volumes is a big one.
That is a big one. Okay. Next, going to the money. Top line and bottom line. So top line revenue being every dollar that came in the door from your origination fees, extension fees, whatever it might be, servicing, and also like the total interest that came in, like a true top line. What did your company bring in that month, that quarter, that year? And then all your expenses are paid and you have a bottom line, which is the net income that can go to, you can leave it in the business if you want. Oftentimes a private lending company doesn't have too much reason to do that. So in essence, you're looking at the profit that can be paid to the owners, which is obviously the point of owning a company. And like Alex Sharfin says, tracking this down the line really is the business. Like the money that comes out on from the bottom line to the owners, and the owner's net worth increasing every month is the point of a business. And if that's not happening, then you got to go backwards and look and see what's broken, right? So the way we organize this month to month is our staff accountant. We have 2 accountants in our operation. We have a controller that handles the loan portfolio and a staff accountant that handles all of the operating accounts, which is where we pick up our income and expense. Once a month, we get an email with the reports from the few different entities we have within our operation, the P&Ls, so we can take a look at it. It's on the calendar. We don't have to ask for it. It hits our inbox at the 15th of the month for the previous month. So now in December, it would come in the 15th, and we'd be looking at November once that's all sorted. And we keep an eye on the stuff. So within those reports, we have this month, previous month, and a year to date. So you can take a quick look at a P&L for a given entity and know exactly what's going on.
Yeah. I think really digging in and understanding your numbers, it makes it great. And if you're smaller and you're doing all the keystrokes yourself, obviously inside QuickBooks, or if you're in essence using a loan servicing software for operating accounts as well, if you have it set up like that, it's easy to run those reports. And if you're not, and you have a controller or a bookkeeper, have them, print them out for you on a regular basis and email them to you, and you can review them. And it really gives you a good grasp of what's going on. And the last key metrics that, I don't want to say one of these is more important than the other, but is the outstanding portfolio. That's definitely something that we look at any given time. Our outstanding portfolio has hovered around $50,000 or $50 million, $52 million for a long period of time. And that's typically where, we have it. A goal that we have moving forward is to try to grow that outstanding portfolio. It's challenging to do inside our operation, right? Every day we're closing new loans. Every day we're getting paid off on existing loans. So that teeter-totters here and there, but it's typically right around that $50 million mark. And not only do we look at that on a company level, on a total company level, but we looked at that as a partner/office level. So everyone who's kind of originating loans, everyone who has other offices that run, we look at each one of theirs individually, and we create goals based off that. We see where that is. Like, for instance, our Pennsylvania office, we always try to have around 10 million. That's the goal. That's the setup on a regular basis. So we like to look at, that's a good kind of key metrics of, hey, are we performing where we need to be?
Yeah, so those are our metrics. Those are what we look at to see how we're doing, gauge our performance, see where we want to improve. But the reality is there is a lot of other stuff you can track. And I'm reminded of this, honestly, like every Inner Circle meeting, because some of the members track a whole bunch of stuff that we don't, like down to the day in terms of life of a loan, for example, if that's important, or interest paid out to investors during that year, or life of the company. Like, who knows? Because that's a big marketing piece for raising capital. It's like, oh, we've paid out, $3.6 million to investors over the past 3 years, like whatever the number may be. That's not something that we track. And there's going to be a bunch of other examples of that I see during those meetings. And I'm like, oh, that would be cool to have. Might not be the most important thing. And we are tracking the stuff that we want to focus on, but there's just many examples of it, right? Like, you can track all kinds of things.
Yeah. I like the LTV on the front end based on the LTV on the exit. Meaning, I know there's members that track that, and it's kind of a pain in the neck to track that, to push that down. And we've had that on our list to figure out a way to implement that. Not all that easy to do, but I think that's something that could be important. But like what Chris said, these are the key metrics that we follow on a regular basis, and it's worked well.
I think the right move is just to pick your 5, give or take, and get really dialed in on those and optimize around those, and you're going to end up with a really successful, profitable lending business. All right, guys, thank you for checking out the show. We'll see everyone inside hardmoneymastermind.com and here next time on the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.